Today is fun. Why is today fun? Well, today, in this video, I get to announce which one of you guys I'm giving $100 to. A freshly minted, smelly $100 bill. And why is that? Well, 2 weeks ago, I went over the 5,000 subscriber mark on my channel. And today I make that announcement, which one of you guys is gonna get that freshly minted, smelly $100 bill. This particular video. I appreciate all you guys for supporting little old me and my channel throughout the years and supporting getting this financial health information out to the masses, people who really desperate need to hear and see someone like me who came from a poverty-stricken welfare background and had a welfare mentality up until I was 45 years old, and now at the point 12 years later building wealth, and to show you guys my processes, my tips and tricks throughout the years I've learned, and to talk to you guys about, you know, taking you guys on my journey, okay? And so, again, this is a very special video today. I get to actually answer one of your financial health questions on my video today. Stay tuned. Welcome back to the Kminustwo Financial Health Channel. If you're new to this channel and like what you're getting ready to hear during this video, I'm gonna ask you to do one important thing for me. Is to share this very valuable financial health information with someone you care and love, someone you know, you think they can use this information to their advantage going long term. Who knows, maybe you can too. K-2s, welcome back. Guys, here we go. This is a very, very special video because during this video, I get to celebrate life. I get to celebrate financial health. We get to celebrate the financial health revolution. And more importantly, I get to celebrate you guys, right? So you guys know recently I went over the 5,000 subscriber mark a couple weeks ago. So in light of that, I'm celebrating you guys out there. You've been with me. You know that I put out a contest a few weeks ago to celebrate you guys. Anyone out there that could get back with me and give me a financial health question, and if I talk about that particular question on this video, and this is the video, I'm going to give them $100, right? And so I got a number of responses from you guys. Overwhelmingly, I didn't think I was going to get so many responses. I did, so I had to pick and choose which one that I liked, what question I liked the best, which question that would resonate with the whole crowd, I believe, the best. And I did pick one. I'm going to announce that here in a few minutes, who it is. And I don't know should I announce the name or should I go ahead and give out the question first? What should I do? I'll think about that. So stick with me here in a few minutes. I'm going to announce who won that contest. Whoever won that contest gets a fresh, smelly, minted $100 bill. All right? So if you guys are new, let me tell you a little bit about me. I'm K-2, affectionately. I am very much qualified to handle this particular question. I went debt-free back in 2017 from 2013 being in $40,000 in debt. I met Dave Ramsey along the way, him and his people, learned from them, learned some tricks of the trade, learned financial literacy, got myself out of debt. And since 2017, I've been working my way up to building wealth, right? And sharing tips and tricks with you guys along the way, what I've learned along the way, what I learned in my past. Then, you know, recently though, you long-term guys, you probably wondering where K-2 been. You know, you guys haven't seen me in a few weeks. I apologize for that. I'll get back with you guys. Be patient. And recently I've been unveiling my life a little bit, showing the guys, you know, what I do on a daily basis to accumulate money and what I do with that money. What different accounts do I disperse that money to? So I've been doing that lately. I've been doing it in a few weeks. You guys have been with me for the last few videos. You've noticed and seen and heard me talk about being a diabetic now, being diagnosed diabetic. So that kind of set me back a little bit. I've had to readjust my life a little bit. You know, you guys already have heard me talk about the 4 healths out there, right? It's not enough for me to talk about financial health, but we also have to deal with the other 3, right? We also have to, if we want to be in this thing long term, to enjoy our financial health, guys, to enjoy the future, to enjoy our lives as we get older, we got to enjoy the physical health as well. We have to make sure our physical health is on point as much as we can. We have to make sure our mental health is on point as much as we can. We have to make sure our spiritual health, along with our financial health, is on point too. All four of them, right? So I've been focusing on all that, and I want you guys to focus on yours as well. Well, let's be all in this together, and let's make sure we support each other and get each other to a point where we can enjoy our financial lives long term, right? But we can't do that if the other three ain't right either, all right? So let's get to it. So the question is, how many bank accounts should a working 20-something-year-old have, and for what purpose for each bank account? What purpose should each bank account serve, all right? Okay, so Serenity, I appreciate your question. I chose your question. I really appreciate you getting at me. I really believe your question, Serenity, was really going to help the group, really going to resonate with a lot of people out there, because part of this channel, I'm helping the young folks too. I want to be able to inspire them and help them out. That's one of the reasons why I started this channel, was to give back to the community, give back to the young people, give them some of my wisdom, my experience, so they can get have a better financial life at an earlier age than I did. I started my process at 45, so I want to be able to help the 20-something-year-olds, the 30-something-year-olds. So this is perfect for me, right in my wheelhouse, and I am perfectly positioned to answer this question because of my background. I was raised on welfare and poverty. I now am on the other side of building wealth. So, and let's just tell you guys right now, I've had a few, overdraft accounts, right, in my checking account back in the day. So this is perfect for me, right? So again, what account should a working 20-something should have, and for what purpose each account should serve? All right, so let's get into it. Now, I'm going to answer this. Serenity, you gave me that question. I'm assuming that you're in your 20s, so I'm going to talk to you one-on-one, and the group can follow along and listen, but I'm gonna assume that you're in your 20s. And I would talk to you just like, it's perfect for me. This question is perfect as well for me, because guess what? My son's in his 20s, my nieces and nephews are all in their 20s. They've heard me talk ad nauseum. They're probably tired of hearing my voice, but I have talked to them about ad nauseum about this kind of thing, how getting yourself right in your early 20s and starting your financial journey the right way. And that a lot of that goes back to what accounts you choose to do your financial business in, right? So I'm going to talk to you like what I would do in my 20s. If I can go back now, what I would do in my 20s, right? Before I jump into the accounts you should have in your 20s, your working 20s, is let's focus. If you come to this channel, look, it's all going to be about your mindset. Understand the I in you, so you can tell your money what to do, right? So on that light, we have to talk about what stage you are in your 20s, right? What you should have your mind focused on. So many times I talk to young folks out there, me being an elder statesman, OG at 57, I've had co-workers, I have people I talk to about financial health and finances and getting their budget right and all that. They want to go from zero, no job, to investing, right? Focusing on returns, focusing on a business, focus on real estate. I've heard so many people young folks talk about, oh, I got a business plan. Where you work at? Oh, I don't work. So I'm very much appreciative of you giving me that question. And part of the question is a working 20-something-year-old, right? Now, you working, I can work with you. Now, you got some things in motion now, right? Because it's all, don't get ahead of we can't get ahead of ourselves. And I get so discouraged. I see so many young folks out there, they want to go from no job to own a business, to have some real estate and invest in the stock market. No shame in the game. I just letting you guys know that's very, very disheartening, because I want you guys to understand this process to this, right? There's levels to this, right? You can't make things go if you don't earn no dough, right? So look, it's all about this right here. You earn, you learn, and then you focus on returns, right? You can actually earn your way to learning, right? And once you learn some more, you can actually go back to earn some more, can't you? Right? In that process, right? That's the kind of diagram I want you guys to understand my mindset and how I would, talk to a young folk out there to get them to understand that, yeah, you can actually learn as you earn it, right? And then once you learn some more, you can go back and earn some more, right? But in terms of once you learn and focus on the next step, which is making your money grow in either a business or real estate or the stock market, these are the three things that have made more millionaires than anything else in this country, guys. And there's some other investments out there, some other things you can get returns on, but these are the top three right here. And once you get that learning down about money and yourself and your relationship with money, okay, you can focus on the return, but not initially. Not initially, right? Because I get people out there all the time that focus on jump right into what's next, and you get ahead of yourself. Let's learn first about how money works, and then we can jump on returns. Now, when we get in returns, we can go back and learn some more, right? But not initially, right? Okay, so let's get into, since we talked about that, let's talk about, before I jump to accounts, what accounts that I would get in my 20s, let's focus on one important thing about bank accounts, right? Any type of bank account, we got to focus on protection. When we talk about protection, we got to talk about you, right? And your money, right? So we want to put our money in these institutions. We have to focus on protections, right? And it's a great thing to learn when you're in your early 20s, even your early 30s, this process. You learn about yourself and money. You also have to learn about how to protect you and your money, right? Your money, just think of it as like this right here. You putting a bubble around your money as protection, well, that money is going to put a bubble around you as protection as well, right? So you protect your money and your money protects you, okay? And so in light of that protection, most bank accounts that are worth something, that are good for you, FDIC, which stands for the Federal Deposit Insurance Corporation. And the FDIC, most good, legitimate bank accounts are FDIC insured. And it's a branch of the United States government that was created to give consumers confidence and protect consumers, right? To protect their money in these various accounts, okay? In that light, the FDIC will ensure, a legitimate bank will have FDIC insured accounts that insure our money up until the $250,000, right? I would say this as a disclaimer before I give you guys an accounts out there that I would choose in my 20s. I would say this: if you are at a brick and mortar account, online account, you're at an account at a credit union, for example, and you don't see that FDIC label, you don't see no talk about FDIC insured, you don't see no writing about FDIC insured, and no one can tell you if their accounts are FDIC insured, don't do it. I wouldn't do it. I want my money protected. I work hard for my money. I want my money protected. I'm sure you do too. So I would say if you don't have no accounts FDIC insured, leave that institution and go somewhere else. Okay. Okay. So let's break it down one by one. The first account I'm going to talk about is CDs, or certificates of deposit, right? And so CDs are savings accounts that offer fixed. Now CDs are kind of special because they offer a fixed rate of return, a fixed rate of interest return to you for a certain period of time, right? Which is good, right? And they generally offer higher rates of return than traditional regular savings accounts that you may find at for example, your brick and mortar savings account, right? I like that. And of course, it's FDIC insured. So they offer a certain rate at a certain period of time, and that rate can be higher, right? But what I like that fact. I like all those things. I like the predictable fixed rate. That's one of the things I really like about CDs, right? You ain't got to worry about your interest rates going all over the place, right? You can pretty much predict it. It's set in stone, right? I like that, right? And it's low risk as well. What I don't like about that is, look, if it's not liquid. It's not as liquid as other accounts, right? It's not liquid as, like, for example, a checking account or a money market account, or those kind of accounts. It's not as liquid as a traditional savings account, right? If, let's just say for example, something happens to you and you need to take your money out. If you take your money out before that time period ends, then you're going to be penalized for it, right? And that's what I don't like, right? There are withdrawal penalties if you take your money out before that certain period of time is up. Let's talk about the next account. Okay, so we talked about certificates of deposits, CDs. All right, so now we're going to talk about traditional savings accounts, right? These are the regular traditional savings accounts you may see at, brick and mortar banks, your U.S. banks, your Bank of the West, your Wells Fargo's, for example. You have credit unions that have savings accounts. You have online banks that have, savings accounts as well. But these are traditional. Think of your traditional savings accounts. These things are specifically designed to have you save money, right? That's what they're designed for you to put money in there and to save money. And while you're putting your money away, you can earn a interest rate for your money that you have saved in your account, right? They want to reward you by giving you returns, okay? Interest returns, okay? Now, I have a savings account now at my brick and mortar bank. I have a checking account, and a part of that checking account, I have a savings account underneath there. What I do like about it, and you'll find this, what I'm getting ready to say, you'll find that some but most major banks like U.S. Bank, Bank of the West, Wells Fargo, they'll have a component of your savings account that acts as a overdraft protection, right? In case let's say you have a checking account, you get in trouble with overdrawing your checking account, your savings account can act as a protector, as a buffer to help you out with overdraft fees, for example, right? Let's say you got money in your savings account and you get overdrawn on your checking account, you got money in your savings account can help protect that overdraft, right? So instead of getting charged $35 overdraft fee, they'll just withdraw it from your savings account. I have that package in my brick and mortar checking and savings account at my bank. So that's one thing I like about, and for you guys, I like that aspect of it. For someone in their working 20s, getting a foothold on life and learning about themselves and their money and getting themselves in order with their finances, that may be a great package for you or someone like you, okay? And I would, if I can go back now, I would like to have more protections, and that's one I would like. So I like that about traditional savings accounts, that they offer that feature. And, it's easy to open. Things I like about these traditional savings accounts, they're easy to open, low minimum deposits. The one thing the biggest thing they have over CDs is they're more liquid than CDs, right? They're very much more liquid. There's no set time period where you have to take your money out like a CD. You can take your money out freely in a savings account and transfer it back and forth to your checking and vice versa to savings, for example, right? So I like that part about it, right? Now, what I don't like about traditional savings accounts are, they have the low returns, right? For example, my savings account in my brick and mortar is only paying me 0.001%, 0.005%, not even 1%, guys. And so that's what I don't like about traditional savings accounts. And like talking about that even further, you're gonna lose money if I keep my money in that savings account over a long period of time, I'm gonna wind up having inflation eat up at my money, right? If I'm only getting 0.005%, 0.001% in returns on my savings account, and inflation rises to 2%, 2.5%, then you can see my money's shrinking. The value of my money is not going anywhere because inflation is eating it up, right? So you're going to lose money eventually by keeping your money in a traditional savings account. And also, what I don't like is some of these, and I think mine is like that too. Some of these savings accounts, traditional savings accounts, will charge you fees. Let's say if if your account drops to a certain point, let's say it's $300, your minimum, $300. Let's say if it drops below $300, the next month they're going to charge you a fee because your account dropped to a certain point below that minimum. All right. So that's what I don't like about traditional savings accounts. But all in all, good. I like I said, I like some features of it. Don't like some features of it. But so that's the traditional savings account. Okay, guys. So we're going to move on to high yield savings accounts. All right. So if I forget to talk about it, all these accounts I'm mentioning today are FDIC insured. All right. And a high yield savings account, I have an online savings account. Mine is Lending Club. And let's talk about it. So savings accounts that offer a place to store your money, generally for a higher interest return, right? Interest rate return, okay? And generally these don't offer any bank tellers. These are not brick and mortar. These are high yield savings accounts that most of them are online, all right? And again, they're FDIC insured, right? Now, what I like about high yield savings accounts, like I just mentioned to you guys, I have an online savings account at Lending Club. And by the way, before I forget, if you are interested in high yield savings accounts, I have a great site you can go check out. I'm not getting paid, there's no sponsorship here. It's just something I have been given by my financial advisor. It's something I use, and that's how I found my Lending Club. So you can go to a site called bankrate.com. Bank, just how it sounds, bankrate.com. And you can get a whole slew of potential online high yield savings accounts if you're interested in checking that out for yourself, right? But let's get back to it. So what I like generally is lower fees. And like I just mentioned earlier, I'm getting a higher payout in my high yield savings account. That's what it has over traditional savings accounts, right? Where you're getting at your local brick and mortar checking account, savings account, for example, you're getting 0.005%. 0.001% and getting eaten up by the inflation, right? And your money's losing. You're losing money over so many times, the longer you keep your money in there, for example. Now, I like that you get a higher interest payouts. Mine is 3.7% that I'm getting right now, which means your money's going to grow faster. So in that light, these high yield savings accounts can be good in the short term or in the long term, right? Whether you're saving for a down payment on a car, house, apartment, you know what I'm saying? You have some goals that you're shooting for, and you want to get a boost, you know what I'm saying? You want to get a rocket boost of your money to help help save your money, help boost your money up. That can, these higher interest rates can help boost your money to where you want to be, right? So that's what I like about high yield savings accounts. What I like about them further is that you can transfer money easier. You can withdraw money easier. They're more liquid. What I like about it is your interest compounds daily, right? Your interest times interest compounding on a daily basis. That's what I love about high yield savings accounts, right? When I look in there, my money is growing without me putting money in there. That tells you that that's a good thing, right? So, but what I don't like about it is something I had to get used to, right? I'm old school. I'm 57. I had to get used to the not talking to nobody, right? I like to go in my bank and talk to someone one-on-one, person to person. You're not gonna get that with the online high yield savings accounts, right? And so that's what I don't like about it. Another thing I don't like about it is some of them require minimum starter balances, right? Before you start your account up, they want you to have certain amount of money in there, whatever. Or and also your interest rates that we just talked about. Guess what? Now, when I first started my high yield savings account online at Lending Club, this thing was 4.4%. I was generating 4.4%, getting back 4.4% interest rates, and now it's down to 3.7. So it changed with the market. You know what I'm saying? How the economy is doing. But now, that's what it don't have over CDs. CDs that we just mentioned before. Remember, we talked about CDs. CDs, that rate is fixed over a certain period of time. Well, you're not gonna get that with high yield savings accounts. It's gonna be all over the place. It's gonna be up and down, right? So it's variable, not fixed. What I don't like about, and this is very important, what I don't like about high yield savings accounts are some of them have limits on how many times you can withdraw and transfer money. That's very important. That concept is very important. going forward. So you got to really think about that. So again, there's limits on how many times you can withdraw money, and with transfer money, throughout the month. Okay, so that's very important. So that's what I like and don't like about high yield savings accounts. All right, let's go to the next one. Okay, guys, so the next account we're going to talk about, the next bank account we're going to talk about is checking accounts, right? My personal opinion, I think all human beings should have a checking account, right? No matter where it is or what it is or how much money you're getting on returns, right? Checking accounts offer to manage your everyday finances on a daily basis when you have access to various tools. For example, access to direct deposit from your checking account, for your check, for example, at your job, right? And debit accounts, ATM access, right? Easy access to your money, right? Transfers and so forth and so on, bill pay, all right? And so this account is just designed for you to manage your money on a daily basis, everything to do with your personal finances, right? And so let me break it down and tell you what I like about traditional checking accounts, no matter where they may be, right? I'm not trying to discriminate against any kind of institution. So wherever your checking account is, this is what I like about checking accounts, right? So they're very liquid. You can get access to your money very easily with ATMs. You have direct, like I said before, you can have direct deposit straight from your check, from your paycheck, from your job, straight to your account, right? You can go automatic, right? Automation, for example, when your money can go be transferred to various accounts, right? You can set it up in your bank where your money can be dispersed to paying off your debt, paying off your bills, coming straight from your check from your job and getting dispersed elsewhere, right? So that's what I use. I use those features, that feature within my checking account. I have a checking account at a major institution, one of the big banks, and so that's what I use that I like. So you can organize better. You can, train your mind and organize your mind right. And eventually, when you get your mind right, your money right, you can go automated. Just go automated and boom, boom, boom. I like that part about it. What I like, some big banks, some mid banks will offer budgeting, tracking, and planning tools, features. You know what I'm saying? I like that part about it, and you may like it as well. What I don't like about checking accounts generally is they have low, just like traditional, brick and mortar savings accounts, they offer low returns, right? And also be very careful. One thing I had to learn, I think I mentioned to you earlier, how when I was younger, man, I had some big overdraft fees. I didn't know what I was doing. I didn't have no financial literacy, and those checking accounts were kicking my ass. With a $35, boom, 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 overdraft fees, and so some of these big old banks, man, will kill you with these overdraft fees, right? And that's what I don't like about checking accounts, right? And that those things add up after a while, and they just relentless, right? Also, the ATM fees. If you have an account at U.S. Bank, for example, and you go use a Bank of the West ATM, well, you're gonna get charged a big time fee. Let me tell you something. I went to where was I? I went to a casino one time, and I couldn't find my ATM anywhere. So I had to go wind up going into the casino when I was there and using their teller. Of course, they wasn't my bank. And so I got charged, $6, $7 to get money out of my ATM. I should have did it, but I usually don't do that. But it was middle of nowhere, and there was no ATM around anywhere, and that was the only one they had. So, but these ATM fees will kill you too. So, and that's what I don't like. And the last one, some of these checking accounts can cost money to set up, right? They'll charge you they'll tell you that you have to have a certain amount of money in there to set up a checking account, right? So those are things I don't like about checking accounts. But all in all, I think, like I said before, I think everyone should have a checking account to manage your money, right? To tell your money, if you're gonna get really good at your money and tell your money what to do, well, you gotta have some place where your money go, right? And the checking accounts is great. Checking accounts are great for that. All right. So let's get to the next one. Okay, guys. So we're gonna talk about money market account, and money market accounts are a hybrid, right? They're kind of like a hybrid between a checking and savings account, right? It's a savings account that can offer you easy access to your money. It has check writing privileges as well, or can offer check writing privileges as well, right? And can offer you easy access to your money through debit cards and so forth and so on. So it's kind of like a hybrid between a checking account and a savings account. It offers you generally a higher rate of return than a traditional checking account that you may find at your brick and mortar, or a traditional savings account that you may find at your brick and mortar. Things that I like. Now I have a money market account, guys, at my credit union, right? And I probably should put this on here. I kind of dyed it over here a little bit. I have a money market account at my credit union, and it generates 3% interest. Okay, and so we're going to talk about that a little bit, right? So let's talk about money market accounts. Let's talk about things I like about money market accounts, right? They're suitable for, now one thing I like about, I've been using mine. I have my emergency fund at my money market account at my credit union, and I'm generating 3% interest. And what I think, money market accounts are good for short-term goals and long-term goals, right? For example, I just mentioned you guys, I have my emergency fund there. Now you can use it for you have a down payment coming up for your apartment that you say that you're looking forward to doing, or you tell yourself you're looking to, save for a house, save for a car, whatever. It's good for that as well, I believe. So you can use money market accounts for short-term or long-term goals. That's what I believe. Now, we're going to talk about the interest rate a little bit down the road here, but it's good for emergency funds, I believe. It's good for easy access. We talk about the higher rate of return. Now, it's regular higher rate of return better than your traditional savings and checking accounts. It offers you, but some of them can offer you, I mentioned debit cards, for example. Some of your money market accounts, depending on where you have it at, can offer you bill pay service as well, right? Automating your bills, for example, right? And so if you're looking for that kind of feature. So that's what I like about money market accounts. Now, what I don't like about money market accounts, we're going to talk about the interest rate, right? They vary, right? They're not like CDs. CDs have that over money market accounts, where the CDs are fixed for a certain period of time. Their interest rate is fixed for a certain period of time. Money market accounts are not. The variables are all over the place. They're up and down, right? Right now, I'm getting 3%, but I don't know what it's going to be like that months later, right? Okay, so that's what I don't like. And also, your money market accounts, some money market accounts will have withdrawals, and here's that withdrawal thing again, that transfer and withdrawal limit again. That's very important. Some of these have limits on them, how many times you can withdraw money throughout the month, for a month period of time, or transfer money, right? Some have minimum balance fees, right? That you have to keep that balance at a certain level, or you'll get some fees added on to that if you don't. Or we talk about the interest rates being variable. So those are the things I don't like about, money market accounts. And then one more thing too is that some of them you have to have a minimum balance to start. So you have to make sure you put in, when you open that account up, you got to put in, I think mine was I had to have was it $2,500 or $5,000, one of the two, that I had to send in to open up my account. So you got to have those money market accounts, you got to have a certain level of money to put in there. And they vary. There are different types of money market accounts, but the money amount varies, but depending on what account that you choose. Okay. All right. So that's money market accounts. So now that you've seen all the accounts, I talked about them, talked about what I like about each one, what I don't like about each one. Now I'm going to give you the accounts, these other accounts I just talked about. Now I'm going to give you the accounts that I would choose, and I'm going to choose 3 of them. So if I was in my 20s, my working 20s, and I'm working, I would choose 3 of these accounts if I can go back and do it all over again. And let's get to it. Okay, so Serenity, if you're still out there listening to me, I said all that, talked about all the potential accounts out there, ones that I looked at, and I gave my opinion on them, what I like, what I dislike about them, all that, and then I got it down to this here now. Which ones would I choose? Like I said before, I would choose 3 accounts. If I was working in my 20s trying to make it, I would choose 3 accounts, and now I got it broken down here for you. The first one is easy, checking accounts, because I think everyone should have a checking account. It's a way you can manage your money. It has all the tentacles where you can send your money to here and there and there. It has a way you can do it. You can manage all your finances from that one checking account. And it's what I call a transactional account, right? You should have a checking account to transact all your finances, right? And use a budget, use a weekly, monthly budget, and in conjunction with your checking account. They should be working together. Your checking account and your budget should be corresponding together, right? And so I think you should use your checking account like this, how I got laid out. That's how I would use mine if I can go back to my 20s. This is what I would do. I would get my direct deposit from my job, from my paycheck, straight to my checking account. Those people out there getting their checking account and going to these payday loan places and these check cashing places, and they charge you an absorbent amount of fees for that. No, that's a no-no, right? Save that money, go to your checking account, have that money directly deposited into your checking account. And from there, now you can manage your money, and using your budget and coordinating with your checking account, you can disperse your money in your checking account to various places, such as, and I don't know, Serenity, what your life is all about, what you got going on in your checking account, do you have debt? I don't know, you didn't mention that in your question. I don't know if you have debt or not, but this is what I would do. If I had bills, that money that came straight from my paychecks, my job's paycheck, will go straight to my bills, transfer straight to my bills. You can set all that up. I'll set all that up in my checking account. I'll, prearrange it in my checking account. And I also, if I had debt, that money will be dispersed to various debts out there. If I had it, it'd be automated, right? I'll automate all that. I'll automate my bills. I'll automate my debt. And I'm 57, so I can't be one of those people who say, oh, you got to pay off your bills. You got to pay off your debt. You can't have no fun. I remember what it was like, you know what I'm saying? I remember what it was like being 20, right? That cute little bank teller that I talked to you about earlier, you might want to go push up on. You might want to ask you for a date, right? I get it. You're going to have fun, right? You're in your 20s. You want to kick it. You want to go to the club. You know what I'm saying? I get it. You got to have some fun money. I'm not sitting here an old fogey, not saying you can't have no fun money. Even though you have debt and you have bills, you got to have, let your hair down a little bit. You can't spend all your money. You have to designate how much money you're gonna spend. I would, for me, I wouldn't spend a lot. My fun money would probably be like, 5% of my paycheck, for example, or less than that. So money going to your fund, and also money being transferred either every time you get paid or once a month to the next thing is your savings account, right? We talk bad about the savings account. You're not going to generate no money and so forth and so on. But like I said, if I can go back to my working 20s, I would use that damn savings account. Like I told you earlier, I had some overdraft fees that were kicking my ass years back. So I would use that savings account, set it up in my bank where I use that as an overdraft protection because I get in trouble, all right? In case life happens to me, Murphy's Law, if something's going to happen to you, it's going to happen when you're not prepared. So I would have that savings account to back me up, being my big brother or my bodyguard, for example. If something happens to me, use that as overdraft protection. Also, I would use my savings account as this right here to get me in the process early in my 20s, used to preparing for things that's going to happen throughout the year, right? Preparing for my birthday, preparing for Independence Day, preparing for Christmas, Thanksgiving, preparing for a holiday, right? So things that's going to happen. I use my 20s. If I do it all over again, I would use my 20s for things that's going to happen and things that can happen. And that's the next one. Let's talk about this one. Again, let's use our savings account as overdraft protection and to serve as a sinking fund. You're going to transfer that money every time you get paid or once a month to that. Number 2, a savings account, right? So I would have a checking account and number 2, savings account. The third account I would have is a high yield savings account. If I can do it all over again, I would take my direct deposit from my job right into my checking account, and either once a paycheck or bi-weekly or once a month, any way you want to set it up, transfer that money straight to an online high yield savings account that can generate, I don't never know, it's variable, the rates are variable, so you don't know what you're gonna get, but generally they're gonna be higher than a traditional brick and mortar savings account. We know that. So, and I would use that high yield savings account as my emergency fund. All right. Now, I mentioned to you earlier, my emergency fund is at my credit union in my money market account. That's just because I'm saving for another thing in my online high yield savings account, and that's my car replacement fund. So I want to use that extra money, the interest rates in my high yield savings account to further push that and further that along. So, but if I can go back in my early 20s, I would use my high yield savings account as an emergency fund. So Serenity, there you have it. Thank you for your questioning. Thank you for your question. There you go. There you have it. You want to know, if I was in my working 20s, what accounts would I choose and why would I choose those accounts? And there you are. So I said all that. Here's my conclusion. Thank you for joining me, and thank you, Serenity, for your question. Stay tuned. Support my channel, guys. I asked you, Serenity. I asked all you guys to support my channel. Give me some love. Give me some comments in the comment section. What you guys think about this video? And stay tuned. Anybody out there that's new to the channel, you like what you heard, I ask that you share this valuable information with someone you care and love. You think they can use this information to their advantage long term. And I'm going to have another one of these contests. Who knows? Maybe when I break the 10K mark, we'll see about that. K-2s, thanks for joining me. Again, as always, we've come too far to forget who we are. So everybody out there, let's take it to another level. Raise the bar. Only then can we toast to ancestor stars. Peace.